Early crypto initiatives promised a digital revolution for heavy, immobile physical assets, proposing that we could simply put skyscrapers and shopping malls on the blockchain. But forcing those markets into emerging economies reveals a physical limit. When local infrastructure is primitive, the friction remains, regardless of the digital wrapper. Minting a token for an office building does not create a buyer pool where none existed before. Real-world barriers, like manual clearinghouses and hazy regulatory frameworks, still dictate the speed of the trade. Tokenizing the immobile targets the path of most resistance, creating a structural dead end that blocks global scaling. To bypass this, Project Sigma dismantled traditional models to look at the physics of finance through a first principles lens. Standard logic defines value as static ownership, a heavy block of wealth held in place. The missing variable is velocity. An asset's true value is tied to how fast it can move between parties. A scalable ecosystem requires assets with inherent momentum, rather than static wealth. Project Sigma shifted focus from the illiquid fringes toward the bedrock of global finance, sovereign debt, and local government bonds. These assets benefit from universal demand and rely on globally recognized, standardized legal frameworks. Compared to the limited market for tokenized apartments, the daily volume of blue-chip equities and government debt represents a massive existing pool of capital. Project Sigma captures these trillions of dollars in existing demand by upgrading the clearing and settlement engines that already run the world. Buying a local bond across borders today involves manual processing and multi-day waiting periods. This delay creates settlement risk. If a party defaults during the 3-day wait, the trade collapses. In this traditional stack, each middleman extracts a fee to manage friction. Sigma Bank AI collapses those layers, creating a direct connection between buyer and asset. This enables atomic settlement, where the change of ownership and the movement of cash happen at the exact same millisecond. If the payment doesn't clear, the asset does not move. This entanglement mathematically removes counterparty risk from the equation. Removing those intermediaries and their associated fees drastically lowers the cost of every trade. This allows Sigma Bank AI to pass recovered margins directly back to the user, offering yields that legacy banks, tied to human-heavy overhead, cannot match. These individual transactions are the building blocks of a larger goal, a global financial network built on speed. Network effects fail to materialize around niche assets because there aren't enough participants to create a self-sustaining market. Sovereign debt and money are different. They are universal units of account required by every major institution on Earth. Because these assets are universally valued, they are globally interoperable. A bond can be used as collateral, a hedge, or a medium of exchange. This creates a liquidity flywheel. Higher utility attracts users, providing the depth needed for even faster movement. By focusing on high-demand liquid assets, Sigma Bank AI creates a financial gravity well that pulls in global adoption through sheer utility. Today, Project Sigma has evolved from a localized experiment into a functional layer of the global financial stack. It is the "I'm in" philosophy, moving past the slow, analog methods of legacy banking. This fundamental shift replaces the manual errors of the legacy system with the mathematical precision of on-chain liquidity. The frontiers of reality are pushed when we solve for velocity. Sigma Bank AI is the engine driving that transition.